Are you an S corporation owner wondering how you pay yourself? How do you take money out of your company? Let's clear up the confusion and dive into the details in this video on the 3 ways you take money out of your S corporation. If you're new here, thanks for joining me. I am Julie Merrill. I am a CPA and I thrive on helping business owners build their wealth, build businesses, implement best practices, and save taxes along the way. Just a reminder, this video is for informational purposes only, is not to be construed in any way as tax or legal or medical advice. Please consult with your tax CPA or tax advisor for your personal tax situation. In this video, I'm going to cover a question I get asked a lot, and there is a lot of confusion about it, in that when you have an S corporation, how do you take money out of it? You're making money in your company. What is the right way, and is there a wrong way on how to take money out of your S corporation? So the first way that we typically talk about taking money out of S corporation is via payroll. You're no longer an LLC, or maybe you weren't an LLC in the past, or a sole proprietor where payroll is not included. As an S corporation, reasonable salary is a requirement that the owner draws on if they're actively participating in the company. So this, as if you're new to S Corps, this might be the first time you're implementing payroll and you're paying yourself an actual, like you're going to get a W-2 from your company. Now, when we look at S corporations, one of the many reasons we get there and choose that entity type is because there is tax savings and we don't have to pay the self-employment taxes on our full net income like you do in a sole proprietorship or LLC. Now, those same taxes though are paid on payroll. So we want our reasonable salary to meet the guidelines, what we pay ourselves as owners for what is considered reasonable by the IRS. But we don't really want to pay ourselves a wage over what is reasonable. We want to have additional profits that the S corporation makes that is not paid out in payroll. So this is typically a conversation I have with my clients. What is reasonable? How much do we need to pay yourself as a salary? And how much does your company keep in its profits? So first thing is salary, and that's usually where we're diving in first. Second thing is distributions. So just like an LLC or a sole proprietorship, the owner can draw from the profits of the company. So if your S corporation is making 100K, 200K, you can take that money out as an owner as long as you are paying the bills and still paying yourself a reasonable salary before those profits are distributed. So distributions is the second way that you take money out of your S corporation. Now, how that looks depends on the company. It depends on your numbers, depends on the time you have involved. It's something we consult with our clients on how that mix looks. Let's just say, for example, you have a $200,000 profit in a year for your S corporation. You might be taking 85 to 90,000 of that in salary, maybe 100, maybe more, maybe less, depending on your situation. If you're not fully spending 100% of your time there, again, many factors go into that. Let's just say 100. So then 100 is then left in the company's bank account for profits. You can draw that 100K out as a shareholder draw, shareholder distribution, if you will. And you just want to make sure it's recorded that way on your books. Another thing we talk about with S corporations is having good books. At least if you're not familiar with bookkeeping, use a bookkeeper to set it up so that you have places to put things and know where things go. If you're a do-it-yourself, or otherwise hire somebody else to help you out with your books. But so first way, salary. Second way is a draw or shareholder distribution. So kind of what that looks like is you might have, let's just say your salary is $5,000 a month. So $5,000 a month is being pulled by a third-party payroll processor. We always recommend using someone like Gusto, ADP, Paychex, QuickBooks Payroll, someone that is a professional that's what they do. Payroll is the easiest thing to mess up with the highest fines and penalties, and you do not want them coming after you for not paying your payroll taxes on time. Trust me. So we always use a payroll provider. We always recommend it. We help our clients set that up. So let's just say 5,000. Let's say you're using Gusto. They take 5,000 out of your business account for taxes and withholdings, and put the net difference into your personal account. So that's payroll. That's going to probably happen on a monthly basis. Distributions. Maybe your recurring revenue, and you know what your revenue is. You're going to take out, let's say, $4,000 a month from your business bank account and transfer it to your personal bank account through just a bank transfer, a Zelle, an ACH. The method doesn't matter. You're just moving money from your business bank to your personal bank. That's a distribution. Those are the most two common things. And finding that balance of how much to take out, how much to distribute, how much to do payroll, that's something we help our clients with all the time. We want to be compliant, but part of it is also cash flow management. The last way, the third way you can take money out of your business is through a shareholder loan. So as an owner shareholder of your company, the business can loan you money that you then pay back with interest. We just want that to be formalized and have like a loan document. Business best practices is to actually have some kind of note associated with that loan. Not as common, and it does happen. If you're a single owner, usually that's not something you're involved with. It can come into more of a situation where you have multiple owners and one person wants to draw, and then we're working on a shareholder loan for that one owner. So if you're a single owner, your kind of cash management is at your fingertips. Once you get the salary set up, that's the first way you take out money, probably paying yourself monthly, at least quarterly. And then distributions are kind of your draw on the profits. That is a cash management. And if you're a single owner, it's at your discretion. Multiple owners now, there's a little more involved because as you pull out money, you need to follow profit sharing. So if you have two 50% owners, if there's a draw for one owner for $3,000 a month, the other owner that's another 50% owner should get $3,000 a month. So that's just something to be conscious of. If you have multiple owners, when you draw money out of the company, you have to follow the ownership percentages for profit sharing. Loans can be just to one shareholder. Salaries can vary based on involvement and the different owners. But whenever there's a draw, you follow ownership percentages. So hopefully that makes sense. 3 ways to take money out of your S corporation. Remember, salary is key, making sure it's reasonable and compliant and just enough so that we're not going to raise any flags with the IRS. Second way is owner shareholder draws or distributions. And the third way is through shareholder loans. If you'd like more help in this type of topic, I have a couple resources for you. I have a free ebook that you can download. It's called S Corp Now What? And it walks you through the basics of S Corporation, just ownership, especially if you're new to it. Has a lot of good detail in there. You can download that at any time at scorpnowwhat.com. I also have a little mini course, if you will, that has some videos I recorded that walks you through how taxes work in an S corporation, things that you need to know as an S corporation owner, talking about board of director meetings, meeting minutes, some tax strategies. That is available at scorpfoundations.com. and is an online self-paced course that you can take as like an e-learning thing that I've put together with topics that I commonly discuss with my clients all the time. I recorded videos to share those with you. So if that's something you're interested in, you can find both of those on my website. The links are all down below in the description. Again, through the free ebook or the online course, the e-learning course is available for you if you're looking for more information on this topic. If you would like a one-on-one consult, we do provide consults for you, and a link to our calendar to book time with us is also below if you're looking for some more personalized tax advice. If you like this video and would like more information like it, ring the bell, follow our channel, and we'll see you next time.